So today we're doing a little tape read today. I didn't put out a bias because I want to let 9:30 print. But anyways, we're still stuck within this higher time frame dealing range between the Friday dump and that basically the entire previous week high and low. So anytime within this range is going to be consolidation based trading, less so reliant on weekly profiles, more so reliant on daily profiles and daily draw on liquidity from the intra week perspective. So we can go back and forth like you saw last week. We can go stay around and chop. So like ICT has said, most of that high quality setups will be forming around midpoint of that entire higher time frame dealing range. So on the daily chart and the 4-hour chart, we have conflicting data as to where we would like to go in this kind of daily one-sided directional expansion. I chose today to do the tape reading stream because of the fact that we had 8:30 news on the board. I'm not sure if we still, let me double check to make sure there's no 10 a.m. news or anything. There's 10 a.m. news today. Oh, they moved it. Oh, never mind. 8:30 news is tomorrow. This is delayed by 9 days. Okay, great. Well, so anyways, you've probably been in this a week and noticed the weirdness of it. So I guess today we have orange folder 10 a.m. Tomorrow we have CPI. Let's see if it actually happens tomorrow and not push it back till Monday. But looking at the past 3 days of price action, we can develop a bias. So counting today is number one. Let me look back 2 days. Where's the liquidity? Where are the inefficiencies? So obviously you have low resistance bias of liquidity right below the previous weekly high, which is still remaining. Yesterday had aggressive run down, dropped into a 4-hour imbalance. You can't see here, and didn't release a lot of inefficiencies in the move from yesterday. And then coming into today, dropped into the inefficiency, held it, displaced away, held this one again, disrespected the order block as it ran back down and swept out the Asian low. And now we're stuck within this range. Not really at 50%, slightly below 50%, the previous dealing range. Yeah, we're right at it, kind of. Never mind. So that's exactly why I'm waiting for 9:30 to release. I see this entire week to be challenging, which is why I've tried to skip out as many days as I can. Skipped out yesterday, skipped out Tuesday. Today's kind of the first day, and then Friday, obviously, with the news is when I want to be trading. But I still find the daily profiling a bit challenging when you do not have that weekly perspective. So we want to look at the week. Where do we think it's going to go? I think it's going to be inside candle kind of day, inside candle kind of week. And then for the day, I don't know. So we're left with the 1 hour and the 15 to develop bias. Looking at the short-term draw on liquidity, London high seems reasonable. Based off the order flow and what we're seeing with how it's respecting the daily gap here. So obviously that becomes the first draw, short-term draw on liquidity. But then you just see 9:30 kind of just displacing up. So we'll see if we can get anything for the macro. I'm really not worried too much if it doesn't provide anything, and you shouldn't either. When markets are like this, it's very sometimes discouraging because it feels like every move is happening without you, or there's moves that are high quality that end up getting stopped out, and the biases don't really make a lot of sense. But number one, there's always a high quality setup once every week. So if you can find that one, then you're doing perfectly fine. And the number two is like, you don't got to be perfect in these. So skip out as many days as you feel like it's needed to, you need to. And then the rule of thumb for even finding high quality setups is you always want to be looking for reasons not to trade first and then looking for reasons to trade, not the other way around. So don't wake up every morning expecting to find a setup. Rather expect the day already to be bad. And then there should be PA in there to convince you, look how good it is. Look how it's forming this structure and order flow and whatever coming into the day that makes it seem like, okay, it would be unwise not to take the setup here. Those are the kind of trades that I want to be taking and that you probably want to be taking as well, and not the setups that sometimes work. All right. So I did check out the ICT latest video. I would say that anyone who hasn't been watching his stuff, that's maybe one of the only videos recently that he's posted that is probably of some relevance, at least to the way that I trade. It's newer content, so I don't know how much I'm really going to use it in my own trading, but it is definitely interesting stuff. So if you want to go back and watch probably the first, someone probably has an edited down version, to be honest, because it's a 3 hour lecture or 2.5 hour lecture or something, but he is just yapping for 2 hours of it. So you want the good content and the golden stuff without the yap. Someone probably already posted it. I don't know who, but you're here for the tape reading. So obviously 9:30 aggressively running up for the buy stops at London. And if this does want to hold and we take out the opening range high, which we already have starting to form at least on the 5 minute, then you'd be bullish remaining into 10:30, and that would probably supply us with a silver bullet setup. So since we ran out the 1 hour sell side from Wednesday, the Asian low, we're looking for a 15-minute gap to preferably give us an alternate opposing PD array. So you have this inefficiency up here. I am noticing this one. It is probably in premium of the range. It's right at premium. But notice how a lot of this has already been filled in almost completely, in the London high rests above this. So when I'm looking for targeting PD arrays, if we're bullish for a 15-minute gap, I'm going to be looking for one above market price, of course, but also one that probably has some sort of inefficiency. So this case, this is what I'd be targeting for the session, assuming we don't get up there before the macro time. But looking at the PD rates now, I feel like it's pretty reasonable. And you also want to see how opening range highs hopefully tagged out. Do have SMT at the lows with ES and NASDAQ. ES looks pretty healthy, so we should be good up there. Yeah, NQ is just, I mean, if you look at the NQ 4-hour chart, it's like bouncing between two gaps. So don't expect a whole lot of movement today. Switch this to 5 minutes. I just do find it a little weird that we leave these a little smooth. First presentation for value gap down here. Even inefficiency of high importance here with the order block runs out London high, and then you want to see it if it wants to offer a discount retracement. You'd be looking for the 9:30 low to the current swing high at the most. So based on what we're seeing here, no SMT at that short-term low. So if we had SMT here, I would have loved that, but you don't really have your breakaway gaps and stuff forming here. So the fact that this breakaway gap is forming this high up makes me believe that this is probably a measuring gap. So when you want to measure the SMR, start this buy program up to consequent encroachment of the measuring gap, you can see how aggressively it's trading here at 9:30. So, and here's macro time. So it might be offered a scalp, but let's see. And then obviously you have the previous daily highs and such above, which are still very apparent and very low resistance. Relatively equal, relatively equal, relatively equal, relatively equal, relatively equal, and then relatively equal with the previous weekly high. So you have a bunch of liquidity higher. Now for the weekly profile for Wednesday PM session to form the low of the week is late by about 2 sessions. So this would be like a midweek reversal, but it's just very late. So when you're looking at like the weekly profiling and how it's printing, I find this very hard to be a bullish week unless CPI, like we have on Friday, smacks it out of the water. So typically you don't see the news driver like this, how it's playing out. So I really don't know how the government shutdown is affecting all this stuff. I'm just trading the PA. But normally you won't see CPI on a Friday. It's normally on a Tuesday or a Wednesday, and you have a much different weekly profile. But since they keep moving it around, that's why I've been sitting out. They do. I would say go and study summer PA. So if you want to look how weekly profiles are affected during higher time frame consolidation, study summer PA especially. I would say study winter PA, but there's not really a lot of, good weeks even within there that really print. I mean, you could, right? Like maybe like January, but May, June, July have really good higher time frame consolidation ranges, and you end up getting weekly profiles that are normally a little muted. So they're lower in volatility, number one, but then also you have a bunch of reclaimed PD arrays. So daily gaps that are ran over multiple times, and then like intra week highs and lows being used as the bias liquidity targets for the week. So you have kind of these weird weekly profiles where price isn't expanding, but almost just printing the same profile within the range up and down. And you can have bearish days and bullish days within there, and you end up reading more about the days intraday bias than you do get a weekly profile, which is why in June and July, if you saw those tape reading streams or me taking any setups, it was mostly based off the fact that like a 3-day look back. What did the past previous days do, and then what does that build a bias coming to today? Not really as much relying on a weekly bias or getting a one shot one kill or anything like that, but just finding daily moves, even if it's 9:30 or 10:50 or whatever, um, to offer an entry towards liquidity. And what we're seeing here, obviously during this macro too. By the way, hopefully that clears some things up. But yeah, they're muted. You expect them not to be as expansive in their nature, so you're left with more consolidation weeks like seek and destroy or consolidation reversal profiles, and then yeah, you're trading more daily or session moves sometimes within that range. But these kind of days here, where you see price expanding a great deal into the 950 macro, it's very easy to just want to take this fair value gap here. But I would encourage you not to, on demo, of course. But obviously, there's 4 stages of price delivery: consolidation, expansion, retracement, and reversal. We want to be trying to take retracement and reversal because those are the two that obviously create swing points in the market. Consolidation does sometimes, but the most prominent swing points are created with those two. So when price is expanding like this, and you see a bunch of breakaway gaps and stuff, it's very easy to get tempted into taking a setup that's probably outside of the rules or more aggressive than you'd want to, just because price is leaving without you, and you have a um, psychological kind of flaw, maybe, I guess. I don't know. But it's just a burning desire to try and take a setup. So if you're feeling that, I would encourage you just to relax and pause for a sec. It's not going to leave without you, and even if it does run 400 points up higher, um, it's perfectly normal, right? Last Friday did that, and look, the market's still here. It's an infinite opportunity. So it's going to be here tomorrow. It's going to be here in 30 minutes. But I find this price action here very challenging because of the fact that I don't know which premium gap it's going to want to respect, and then which gap is going to want to actually disrespect, give me discount, and then run up to my premium array. So if it's going to do this all morning, or premium array, premium array, premium array, then not even touch the order blocks, and then it runs up to this 15-minute gap, I'm not very interested in any of it. Your job here is to get paid based on the decisions you make, not for how much time you spend in front of the charts, not because you decide in your mind you want to take a setup. You only get paid to make good decisions. So sure, it is running towards an expected bias. Sure, it's offering targets. Is it offering high quality entries within this? No. So whether it consolidates or whether it expands, it can still be determined low probability if the precision in lower time frame price action isn't there. At least a presentation of the model that you want. So when price is expanding like this, I find this to be more challenging sometimes, even than a consolidation range. I find reversals to be probably the easiest, retracements second easiest, and then expansion and consolidation you have to be very careful with. There are ways to get in. It's just not my preference to be buying off of one of these gaps and placing my stop here, especially when it's not giving me the profile that it's expected to be a super strong day. Like if we had no manipulation below midnight open, if we had no manipulation below the 8:30 open, then I would consider, okay, maybe it's time to take premium gaps. But since we don't have that and it doesn't look extremely bearish or anything like that, then you can see it's just running right at 931 down to the imbalance and then leaving. So we'll have to see what we get off this 15-minute PD array. But this is an inefficiency in premium of the dealing range, so you would expect some sort of discount retracement, hoping on the 5-minute. And even if someone was to scalp, you probably could even take this SISD as a short-term scalping opportunity, but it's against the grain, so I don't know how far to go down, maybe to this gap or something. But now it's tagged a premium array. You want to assess if it's going to offer a discount. So it's tagged the inefficiency, it's tagged the gap, the gap and the liquidity on every time frame. But now you want to be looking for your higher time frame dealing range. So preferably picking an intermediate term low. This would be the smallest one. Then you have this low. And I'm picking all intermediate term lows here. And then you have the 930 swing low. So these are your dealing ranges that price will reference. And depending on how far we drop down and which ones you respect, it gives you a good reading on how far price is likely to draw to in its next DOL. So whether it wants to go for the AM session high or the previous weekly high, or maybe even just use this gap again. Understanding these dealing ranges. Obviously, I'm not drawing these out on my chart, but I just want to give you a representation of what to look for when it does something like this and when you're going to get a discount retracement. So when price is expanding, you may not be offered your fair value gap right at 950. You may not be offered your order block or SISD right at 950. Instead, wait for a premium array, preferably on the 15-minute plus, to be tagged. And when that 15-minute PD array is tagged, that's technically opposing your bias. Watch how it prints within it, making sure it's the time of day that allows you to take a setup that continues, and then see if you get a discount retracement off of that. So what we're seeing here is, sure, I'm bullish for the session. The 15-minute chart, the 5-minute chart are running into the 15-minute PD array, but it's not closing all the way above here. So it's indicating some weakness in the market, potentially dropping down to this gap and this order block. It also is the time of day that would still allow for an expansion, but also it's the time of the day that is likely to form a potential reversal, still within the opening range. Yeah, this is a 15-minute sibi. The inefficient section of the 15-minute sibi, right in here. I'm not going to pull it the entire reclaimed when this is already efficiently filled, so I'm just pulling it from the wick to the wick. And that's obviously how you see the reaction that you get here. Right? So yeah, this plus this will be nice to see if it wants to continue down. And if it doesn't, no big deal. But based off how we're reacting, and ES is still looking good. It's a little bit weaker. I think it did offer a discount retracement, did it? Yeah. Yes. So we're waiting to see if NQ wants to do the same thing. And if it doesn't, then that's pretty high quality momentum SMT. But I don't really care about that. See price action even respecting this premium sibi. So it looks like it's going to enter into a short-term sell program, which is all we need for it to enter into discount. All right, there's 2 stages at this point. It's tagged entire time frame PD array. It's 2 stages it likely will enter into reversal or a retracement. If it's not right reversal, then we're likely to see it dig further into the range, and we don't really want to be taking that. If it's this one, and this is only prevalent if the drawn liquidity is higher, then we can find a setup. So I'm not just looking for the inefficiency to be tagged. I do want an order block to be tagged as well, just to increase the probability that the retracement is over. So we did run on a short-term low there and filling this gap. But just look at how from this point onwards to the right, it's entering into a sell program. So technically, these should be used as bearish OBs, right? Since we closed completely through. If you go to the 15-second chart, you'll see what I mean. So just watch to see, does it want to continue and hold this sell program? And then does it want to flip back into a buy program for the higher time frame perspective and see if you can get on board with that? All right, so it's coming back up into the inefficiency here with the bearish order block. They ran up into the higher time frame PD ray, so you want to see if it wants to wilt lower. And preferably digging into consequent encroachment of the 1 minute gap because you see the order block is lower, as well as the fact that the 15-second has a gap here. So you can layer that. Right? And this is a scenario where being wrong wouldn't be the end of the world. We're bullish. We're watching how it enters into a sell program. If it doesn't go as far as we want it to be, does that completely invalidate the idea of us taking a setup? No. Does it make us want to just skip on the day? Probably not. So even if I'm wrong and it doesn't enter a short-term sell program here as a retracement and offer the discount PD array, we can build a bias off of that, potentially look for an aggressive, a more aggressive entry now because we're seeing it fail to offer any real retracement. So that's an example of where it'd probably be better to start looking for those quick, energetic fair values to be used. There's different portions of the dealing range that those are going to format. I'm not going to get into that, to be honest. We're going to be here for 3 years, so we'll just watch this price action and see what's going on here. I know it's been a while since I did one of these tape reading streams. Hopefully I still got it. I used to do these like 5 times a week. I don't know how I did that. So like, look, it's failing here, right? It doesn't offer the discount and efficiency, but it doesn't invalidate our bias and still gives us some sort of information. I'm reading this on the 15-second chart. You do not need to be doing that. I'm just doing it this is the way that I trade and the way that I teach. But it is 100% not necessary that you have the 15-second chart or access to it. You can literally just see what's going on here, right? So still 6 minutes left in the macro time, and there's no news. So really, you have all of Silver Bullet to be finding a setup 9:50 to 11 o'clock. Remember, the market has to convince you to take a trade. It's not the other way around. So when there's impatience looming and the feeling of it going to run, or this is the day to trade just because I'm streaming or whatever, don't worry, don't panic. Just, it should be mundane. It should be boring at this point. You know, this should just be work. You do your job and you leave. And you get paid to, like I said, just make decisions. So you don't even get paid sometimes to take a trade. So I'm still watching this little gap here. And notice how it's not giving secondary displacement, right? It's not entering into a very aggressive sell program. It's being high resistance in this manner, which is another indication that our bias is probably correct for the short term, right? It's not going gap, trade into here, gap, trade into the short term one, gap again, and then forming a breaker and then respecting that and shooting down another 45 points. It's gapping away, coming back all the way to fill the imbalance and touch the order block. Then it's coming all the way back down, and it's coming back all the way to the last order block. And it's coming all the way back down. So it's high resistance in its manner. You're not going to see this obviously on the 1 minute chart, but maybe you could, right? The fact that it's not doing like the left side, where it's just gap, touch the least amount of it as you can, and then leave. So these are all things that are going through my head when I'm tape reading it. I'm trying to just spam information into my brain as much as I can. It's high quality instead of just reading it and waiting for 9:50. I'm trying to still pick up on, you know, how each candle closes. Is it taking a box for one end? Or is it taking a box for the other end? Or is it taking the box right in the middle It tells me this is something I don't want to be partaking in. So you should have 3 boxes. Okay, so it entered into the short-term sell program after it tagged the swing high. And now at this point, since it tagged into this inefficiency, I want it to come back down to the order block. It doesn't have to, but I want it to come back to the order block. If it does not, and instead on a 15-second chart starts to gap and take out this swing high, I would be very, not prone, but I'd be looking to either take a SISD entry or then a 1-minute fair value gap that forms off of this. And take that and just look at the little tiny manipulation leg in there and get a scalp off of that and go. We still have the buy side from yesterday. Is this previous daily high? No. But next available time frame or time-based liquidity. Let me just double check there's no more targets in here so we can get off 15. Gap, no. 1 hour. No. So, yeah. So these are really the only 2 targets for a bullish session I would be looking for. So look at goes wick, candle body all the way through that, wick, candle body all the way through that. So it's not leaving inefficiencies. Look on the 15-second chart. See how there's no inefficiencies being formed in there? High resistance. Right? Now you have relative equal high, relative equal high, relative equal high, relative equal high. The lack of something is sometimes even more important than the presence of something. So if it's not giving you what you want on a 1 minute, 5 minute, whatever, don't read that as frustrating or anything. Read that as an opportunity to either sit out or to flip bias or strengthen bias. So in this scenario, it'd be very wise, since this is it's bullish in all time frames from the 5 minute to the 1 minute, and you're dropping to a 5 minute gap here. Be very wise to cycle from the 1 minute to the 5 minute and see if there's any overlapping order block with where we're touching right here. Because in some scenarios, the 1 minute order block won't be tagged, but a 2 minute or a 3 minute order block will be tagged if it's a greater dealing range. Now, I already know it's probably not going to be, because this is the only 2 minutes of price action that was down within that range. So it's very unlikely that you see that. But those who have not seen the 1 minute chart for years and years and years and understand how time frame alignment works, it's going to be something, even if you have 2 years of experience, there's going to be tiny details like this that you'd want to just go in and check. So I would cycle from the 2. You see the order block is still overlapped. The 3, now there's no OB. 4, 5, you're obviously not going to have one. But it's just a technique that you can use to see, because then obviously if you see it running away and you're like, it isn't tagging order block, I would go to see, okay, just 2, 3, 4, 5, see if there's anything there that lines up. If not, that's all good. But it obviously gives you information. So I'm very zoomed in here because everything that I need to deal with is within this lower time frame. Let me screenshot this quickly. Looking for discount retracement and possibly range expansion after that. Sitting on my hands until we get something more clear. So now it comes back down and it's touching into the wick and into the body of the order block, as well as the inefficiency here. And since we're higher up in the dealing range, I don't know how far up we are. Let's say that consequent encroachment of this gap is terminus, meaning where the MMXM is going to finish. We're already above 50% of that implied dealing range. So you're going to see a lot more run-on stops, a lot more deep retracements that you see compared to down here. This is taken from an ICT video in the content he used in the latest lecture. But this is one of the more informational bits, is that order blocks and fair value gaps should be respected with a great deal of precision in the lower quadrant, in the lower half, if you're bullish. When you get up to 75% and the upper 50%, a lot more stop runs and disrespect of those OBs are going to happen. Doesn't mean it flips the bias. It just means that it's higher resistance as it gets higher and higher up. Quick energetic up to 50%, and then the premium end of a buy range is more challenging. Who would have thought? So in here, I would like to see the order block hold. just based on the fact that we're closing below mean threshold here is already showing an indication of weakness. And now we're resorting back to the higher time frame dealing range that I mentioned before. So we're in discount of a range. I do want to make sure that silver bullet isn't going to consolidate. So the way we could do that is looking for displacement bisis on the way out of this. So instead of just buying it off the order block here and hoping that it leaves and not just continue the sell program, I want to make sure that it's entering into a short-term buy program. So we just saw it after tag the 15-minute IRL, enter into the sell program and start to hold these bearish PD arrays. Doesn't mean it's a trade idea. It just means that it's indicating us and building a bias for our longs. Now I want to see it give me some sort of indication that it wants to trade higher. So we just tagged into a 15-minute gap on ES. We just tagged into a 5-minute gap on NQ. And then on NQ 5-minute on the 1-minute, dropped into the 1-minute gap, plus 1-minute order block, plus 1-minute discount. Now we want to be seeing on a 15-second chart, preferably, is there indication of any buy programs being entered into. I'm going to boot this up just for a little bit. Exactly. Yep. London zone plus bullish breaker block. So I want to see how this gap here is being held. If it wants to be used as a breakaway. Started within a balanced price range there. And then I also want to see if this is being reused as a reclaimed bisi. So is the upper quadrant of this especially being used when it closes past to support candles? So like in here. Doesn't want to hold this. We're keying off of the macro here. We're not using the macro exactly. Let's see how it just wicked into there and it's not holding it as a reclaimed bisi. Now we don't have displacement here through the breaker. I would have liked to see that. All right, that would have been the SysD that we need. And then short-term targeting would be this range in here. Puts it slightly higher up. So he's wicking down to the reclaimed bisi. So we're waiting to see if it wants to get into a buy program. Candle bodies right now are indicating that it would want to. It's also delivered above the bearish order block. Yeah, so now my primary focus is basically within this section right here. I'm watching if there's any bearish PD areas over here that could be used as inversion. Which don't really see a whole lot. I mean, you got this gap in here, but I'm not too concerned with this. It's really just the reclaimed bisi from the 1-minute chart. Order block here at 10-12 is a low probability. But let's see. Candle body is obviously telling you the narrative. And as soon as it gaps above here, we should be confirming inside of that market maker buy model. So I want to see if it gives me one little entry. I also want to see if this is being used as a bullish order block now. So it's not really. I was looking at the 15-second chart. We got a bullish order block here, and it's just wicking above it. Low probability. So we're still back within the dealing range on the 1-minute chart, and it's not leaving the breakaway gaps. So I'm not too convinced it's into the buy program yet. And I'm gonna go back to the 1-minute chart and wait to see how the 1-minute PD rays are forming here. But this is still an aggressive candle. Same thing with this. See what ES is doing. See, this is a little bit more bearish. See, it's starting to hold these PD rays and enter into the sell program a bit further down, targeting the London low, or the 8 a.m. session low. So no breakaway gaps in now. You see, waiting to see if it wants to reform over here, and preferably like up here, because all this is a consolidation range. If it was to leave it within the consolidation range, then it's unlikely to be a true breakaway gap, of course. So you'd like to see breakaway gaps form. In this case, not near the SMR. Can still form near the SMR, but the chance of qualifying it as a breakaway gap as it's forming down there is just low probability. So I would wait for PD rates to be respected inside the consolidation range, and then a breakaway gap to be left outside of the high end, or right around where the balanced price range is, and then leave. So like a gap being formed here and being left, I would see as a breakaway gap. Up here, now you're leaving into more uncharted PA, at least for the last 10 minutes or so. So more likely it's going to be filled. But you see in here, it's still holding the sibis and bearish PD rays. It's more likely not to get a run below this swing low, dig into the discount fair value gap here. So it doesn't make or break anything. This is why I said I'd much rather wait for it to enter into a buy program to get a setup than just taking it right off the bullish order block with the gap. So kept me safe. Still don't have a trade, which, like I said in the beginning of this, is not a big deal. But I want to be a sniper in here, and it's going to offer me a bunch of different opportunities. And I don't really want to be flipping bias too much today. We're still within this 50% of the dealing range, so I don't know how much we're really going to move. You know, we just came up, filled this imbalance. Now we got imbalance down here, a low resistance sell side down here. It did run this also during the opening range, so I don't want to be too naive and thinking just bullish PA, bullish PA. Right now it does look a bit weaker, but let's see. 5-minute runs below the midnight opening price. Still no 5-minute discount. So still same thing. Dropped to 5-minute, 15-minute gap, both NQ and ES. Seeing now if it wants to run. So here's your first inefficiency. And not inefficiency, FEG. I'm just watching the bullish order flow. So immediate rebalance, coming down, filling this little tiny gap here, closing back above the wicks. Breakaway gap in here, so it shouldn't create too much resistance. You want to see a gap and probably take out the opening price of the 1018 candle, which it's doing so. Holding nicely inside the VI. You want to see a gap back up into basically this reclaimed bisi. Yeah, so it's following a little bit more. Now this is where I like to see what's going to happen. It should be used as an inversion fair value gap, but I want to see. Sorry, I printed above 50%. So if it comes back down and touches this bullish order block, I'll go long. If it doesn't, then I'll have to find another PD array and premium. But I want to try and get it as far down a discount as I can. So let's see if it wants to use this now. It's a little fast. I just don't want to be doing the same exact thing we saw at 9:30. Just buying it off of strength. See if we can get a discount array. Tiny gap there. IFEG. If it can get a little bit further down to that order block, I would like it, but there we go. I say it enter into a buy program, and then it just doesn't give me a good entry. Maybe I just gotta be more aggressive. I'll put a buy limit here. It's funny, man. I'm keeping a very conservative stop here. This volatility is kind of weird, so. The order block here is within the inefficiencies, so I don't want to try and be too precise. See if we can get a fill. 30 seconds. Yeah, you got multiple PD arrays all within it. Oh. "15 seconds, 1 minute. Yeah. Huh. All right. We'll leave that there. See if you want to get filled. But, I mean, I guess the methodology is still there, right? Waiting for a buy program, drops into a 5-minute gap, offers the imbalance plus order block at the lower price. Then you buying in the premium array, drops into discount, starts giving you PD raise, as I say. It starts to hold And you can see how aggressive once it enters into a true buy program, it just goes. So a little late to the trigger there, but I'm not unhappy about it. Just it is what it is. I literally wanted this candle to come back down and approach the order block here. And then you just saw the candle just gap up. And you do have a VI here. I want to make sure that you mark this out because it's a little bit harder to see. But you do have a VI here, which is going to be used as an imbalance. You can see with the candle closure up right here, and the next one opens right here. Technically, as a VI, it just looks funky. So actually, if it comes back down and touches the order block here, I'd be also inclined to buy and put my stop at the intermediate term low. Because I don't know if I'm going to get filled. You know what, we'll build 2 on right here. And if it wants to give me a run lower, then I'll take this one. I'll put my stop at main threshold to the we'll do below the order block. It's still kind of a weird setup, isn't it? And then just getting the 2. So last manipulation, like at the 15-second chart. Like I said, you don't need all this stuff, but you have it still on the 1-minute chart. And then 10:30 becomes a short-term draw on liquidity, draw on time. And then the AM session high is a partial opportunity. But just like a rough, like 2-to-1 scalp. Now you're just waiting. And you just turn your brain off. But hard time from price action bullish. We still have time of day to make the new high. Dropped into discount, entered into a short-term buy program very late to the trigger here, basically buying it in premium of that range, which is unfortunate. But so let's say subpar entry. But order flow in line, higher time frame bias slightly in line. I mean, it's still within 50% of the range. So I don't know how much expansion you're going to get after this move. It may just run out the swing high and be done. I don't know. But yeah, we'll have to see. Another buy stop there. We ran out the short-term swing lows on this. Dropped into the gap with the order block. My original entry should have gotten filled. Touching the order block with a reclaim bisi. That should be the last line of defense. High probability order block. So stop is underneath it. See if it wants to hold. If it comes and stops me out, then I'll be done for the day. Comes back down, reclaim bisi. Staying above the liquidity pool to the left. The short-term soup. I don't really want to see a lot of candles close below that. Should see the same market maker buy model forming in here. And get secondary displacement that I'm going to be in. I don't know how fast it's going to be, so I'm using limit orders here. Otherwise, I would use market orders. You can see it's holding the inefficiencies a little bit. It's having some trouble in here, which it really shouldn't be if it's already in discount of this short-term range. But I want to see it displace, leave breakaway gaps, measuring gaps. There you go. I can trim our stop. What the heck just happened? Did it not get filled? I'm confused. Oh, did it reject? Is that too high? There we go. So, anyways, 1030's hit, dropped into the inefficiency multiple times with the breaker. On the 1 minute chart, looks like I'm going to get stopped out, but who knows? Take profit right now is just targeting the last manipulation leg of the retracement, shooting up for a 25,213. Bisi liquidity is all the way up at 25,289.25. So I don't really want to be trading all the way up into that range since we already know it's the consolidation profile for the day and the week. I'm going to put a partial, put 2 partials right here. And the rest runners up to the 25,213 level. Why is it different here? What is going on? Oh, actually that makes sense. Close. Yeah. Clean some of this up. FVG, and then you have a change in the state of delivery here. So it's a very, very, very late move. Right? We're basically taking the trade at 1030 when it's expected to make the new high. It's in premium of the dealing range of this dealing range here and of the higher time frame dealing range. So would I suggest taking this setup 10 times out of 10? No. It's more of the fact just explaining and demonstrating the idea of these short-term sell programs when it's expanding into a retracement and then buying off of the strength that you see on the right side of the curve. So I try and do these tape reading streams so you learn something in each one, because I've done, countless of these and taken countless executions where the textbook setups are all taken previously. So if you want to go back and study those, you can. But each of these ones offering the logic behind it and what I'm looking for. This is the way that I kind of trade, not the exact way, but something very similar to this is basically just looking for these short-term buy programs and then, taking what's being offered. What's up, Nathan? How you been? Sounds good. Dropped in a discount. Turtle Soup, the second stage. Exactly. Yeah, you get a bunch of stuff all in there. So it's really just I like trading this way because whatever price action we're getting, whether it's consolidation week or whatever, it gives me an entry opportunity. Like I said, you do not always have to be hunting the setup and thinking that it's leaving without you. There are endless opportunities within this, whether I wanted to go short or go long. So in here, here's another breaker entry, right? Plus fair value gap. Maybe earlier if you want to take the macro, but like I said, since you have no news, you really just are looking for an entry between 9:50 and 11 o'clock. So I'll probably be there in December. So we'll see if we can get anything popping. Yeah, no problem. Take care. I'll let you know. Why don't talk to me. So in this case, Sisty after Sisty, I can definitely be a bit more aggressive with the stop placement here. We have a gap plus order block. I could keep it down all the way down here. It's fine, but I think leaving it like this is perfectly fine too. Even up from to the order block. The 15-second chart, it's all balanced. So what's the point of it coming back down into here, right? And then as soon as we take partial, we'll trim stop. Here's your time dynamics playing in. All right, 10:30 to 11 new high, 9:30 to 10 low. So stop move to break even. Still leaving a runner up to that little projection that we have going. And I really don't care to take it up to here. I mean, technically, if you want to measure these fibs, it gives you probably, yeah, see. But just for the short term, we'll just take it up to this. And now, since this is a premium array, and since this is all inefficient section of this price of this gap, wow. Since we're inside an inefficient section of the inefficiency, you're expecting a bit more higher resistance. Now, if we go back to the 15-minute chart, you can see that there's a wick through here, but it's aggressive wick, so it's very inefficient all with this wick. And then up in here, it's a wick. So all this price action, if you go to the 5, to the 1, all that stuff, you want to be hunting to see where the inefficiencies are. You see another one in here, where I can overlay this now. And then on a 1-minute chart, it's not important that you go back into the 1-minute chart and look for all this stuff, but it's fun to see. You can see that in here, there are these highly sensitive areas of price action. Now on the 1-minute chart, you see it filling in here. I'm not going to go back in and extend out these 1-minute gaps, but you get the idea. This is basically where you'll see price consolidate and stay within, and then gap in the areas that it's not darkly shaded in. So actually, let's pull the 1-minute gaps over, and I'll show you what I'm talking about. But let's pull this 1-minute gap. And you can see it's efficiently delivered in here. So we'll just pull it up to the inefficient section there. And we'll go from, there's a VI in there. So we'll just pull all of this. And I'll extend these over to the right. And you can see there's darkly shaded areas. There's lightly shaded areas. And those is where the overlap in these sections is where you want to see it gap through and see speed. And if you don't see that and you see slowdown instead, you should be worried. If you see speed through the slowdown areas, then you should be happy. So we look at these kind of just as an overlay of speed bumps. Since our drawn liquidity is higher, you want to be seeing each of these, mainly this higher time frame gap that we have in here, right? But since we've overlaid sections of this on the 5-minute and the 1-minute, you can get kind of a predetermined reading of how price is going to print in here. So on the overlap sections, you want to see slowdown. Like you see in here, it kind of goes, it's not actually too bad, but it's wicking, slow, slow, slow. Then you want to see preferably some sort of inefficiency formed inside of here, or at least speed, and then slow down, slow down, slow down. So these areas is where you can see retracements and order blocks form, right? Because think about this logically. If it's inefficient from the left side, and you pull that inefficiency over, you want to be efficient. How does it have to be efficient delivery? You see buying and selling within that. If we're bullish, the buying and selling, specifically the selling within that inefficiency, is going to be used as a high probability order block for a move higher. This is all being recorded, so if you want to go back in and rewatch that, you can. But the sections in here that are inefficient, if an order block forms within it, we're still bullish and you see it expanding away from there, that is an area of balanced PA. So a lot of times if there's a gap plus that order block, you can get a high quality setup off of there. Since this is, kind of being seen as an inversion, but you don't need any fancy whatever. You don't need all this, bank levels and stuff and whatever, but it's all in the PA. It depends, right? So if you're still bullish and we're expecting the bias of liquidity appear to be ran out, this 15-minute IRL we have marked out is technically an inversion gap, right? Now that being said, it's still inefficient, so we still have to see how PDRs are being formed within that. But yeah, technically speaking, if there's a high quality cluster of PD rates within that, then it's basically taking a trade off of the 15-minute IFVG. But you're going into a lower time frame to study to see what PDRs are holding inside of that IFVG. It should be OBs, since we're still on a buy program, right? And inefficiencies, maybe short-term swing lows or whatever too. But there's consistency in the marketplace. So understanding how each PD array is being represented and filled and not filled shouldn't be looked over, right? Every single candle has importance. Doesn't mean you have to find every single candle's importance, nor do you have to explain it. I don't explain it and figure it out. I'm just looking at the things that help build me a bias. So everything you saw in here obviously got me into a trade, but then after the fact, I'm not putting on a trade and just letting it run. Most times I guess I am, but I'm also watching to see how the PA is holding and whether it's not holding. So we see the secondary displacement here. Very, very good sign that the trade is likely to win. Is if it gaps, you get into the inefficiencies it forms during that gap, and then it gaps a second time, probably an increase of 30 to 50% that your drawn liquidity is correct. So that's one. Two is obviously how we treat breakaway gaps and PD arrays that we left behind. So we have this gap in here, which was already reused. I want to see that be used completely left open now, which is my stop is at break even. And then obviously these PD arrays up here, this 15-minute IRL. If it wants to support price into its move higher, then we should see very specific things going on. And this is exactly what we should be seeing. Is price stopping magically in this dark shaded area randomly? And now it's being used as a speed bump. So it's offering a discount retracement into the inefficiency here, and hopefully not all the way down to this order block, but it's allowed to come back down into this. Say hopefully not, because I'm going to get stopped out, but it is allowed to come back into this order block range. And to be honest, if it wasn't this late into the day and also already inside of a premium array, this would be, if there's a larger gap here, this would be your silver bullet. -1's -0.5 inefficiency mitigation block inversion PD array plus time of day. So that would have been a really high quality setup. Now, I don't know if there's one over here that we could pick and select. I mean, I guess you have here, but it doesn't really tag the order block, so it's kind of disappointing. So, I mean, if you really want to look for silver bullet, I mean, this one, 1030, kind of fits the criteria, right? Just maybe not within the -1, -1.5, unless you take something like this. Yeah, I mean, I don't know. Anyway, so it's coming back down into the order block. Again, you can cycle here, right? Just how we were talking about before. If it wants to tag this, doesn't want to. What is it doing on multiple time frames? You want to go in here and cycle too. So I'm going to keep the 5-minute up. Let's go back. 5-minute. Just tagged into a premium array. So we're looking for discount arrays that can respect and preferably hold. Your 5-minute order block is going to be your most important thing. So I have a very aggressive stop here. Something that if you were to go back and study, this is not a point of invalidation. It's a point of protecting my risk. So there's two differences. In this case, if this stop was to be ran out, the trade could still be valid. It could still be going higher. I am just putting it here to protect the trade. I don't need to do this. It could still be down here, and I still don't think it would be a losing trade. But for those who are learning, I do most of this for those who are very new at learning. It protects you from stuff like that, where I can come. Okay, well, it should have closed me out. There you go. When price action, you want to take a short win, that's great, but move your stop to break even. So there are techniques and tools that you can use in different scenarios. But like I said, this is not a point of invalidation. So we still want to see, and like I was saying before, how we are treating and trading on these multiple time frames. So you see it's coming all the way back down into the bullish order block and filling the gaps over and over again. And it stopped. Look how those candle bodies are stopping right within the deeply shaded gray area. All right. So it comes back out, stops me out, and it's starting to enter into a no buy program. All right. So anyways, you'll probably see this continue up at least until the upper portion of the 15-minute gap. And maybe even up into the ELRL up here. I'm going to do a markup of today's price action. And then we're going to do the psychology stream, I think, after that. And then the one shot, one kill video will probably be tomorrow or Saturday, as that's supposed to be done this week. All right. So hopefully today's price action reading was insightful to you and helpful, and you learned something from it. I'll obviously post this up on YouTube, all recorded. So if you got any questions on it, you let me know. And if not, I will see you guys, Lord willing, tonight for the markup and psychology stream. Appreciate you guys attending as always. Have a great rest of your day. Do the things that are necessary to succeed. And I'll see you tonight. Peace.